Good afternoon. Consumer inflation was higher than expected in October. Data from SABC shows that annual consumer price inflation was 5.9% in the month, up from 5.4% in September. The main contributors to the annual 5.9% inflation rate were food and non-alcoholic beverages, housing, utilities and transport. Inflation came out closer to the upper end of the Reserve Bank's target bracket of 3 to 6%. The higher inflation level reduces the likelihood of lower interest rates anytime soon, as the central bank uses higher interest rates to try and curb rising inflation. Food inflation remains elevated at over 8%, with the highest price increases recorded for vegetables, sugar, sweets, products as well. The price of petrol went up by R1.14 in October, while the diesel price increased by R1.96 per litre. The high inflation environment means consumers will struggle with the elevated cost of living for longer. All right, let's stay with that story of SABC saying annual consumer inflation increased in October. The headline rate was 5.9% from 5.4% in September. Let's speak to Johann, the Chief Economist at Old Mutual. Johann, thanks so much for your time on SABC News this afternoon. Just talk to me before we get into the numbers about why do we watch inflation? Does that data tell us about the state of our economy?
Inflation is the population's enemy number one, because it eats away at our ability to spend, it eats away at our ability to save. And that's why it's the Reserve Bank's main enemy, and that's why they want to control inflation as much as possible. Lower inflation is good for us as consumers, it's good for the poor. Higher inflation hurts us all, and therefore we need to keep inflation under control. But you do get cycles within inflation, and we look at the headline in numbers that you've been quoting, but also the underlying picture, excluding the more volatile components, is also important for the Reserve Bank to watch.
Mm-hmm. Johann, with that 5.9% figure, what does it mean practically?
Means that on an average basis from a year ago, prices have increased by 5.9%. So the basket for all of us as individuals will differ, because you and I will spend our money in different ways on different goods and different services. So the average inflation of 5.9% is not necessarily your or my inflation number. It's the average for 62 million people across the country. So it's an average of averages. Having said that, it's a very good number. The way it's calculated, the methodology behind it, it's a world-class number. So it's an absolute hard, solid, great number. But you and I will have different individual inflation rates. So price levels, on average, for all of us in the country, is up by 5.9% from a year ago.
Okay, if we zoom into the different sectors, food and non-alcoholic beverages, 8.7%, transport, 7.4%, health, 6.4%, all of those recording inflation of above 6%. What can we read into that?
Well, different categories go up at different rates. Food inflation, for instance, food prices are very dependent on seasonal factors. And we've seen recently egg prices rising quite significantly because of the specific problems within the poultry industry. We've seen significant increases in potato prices, for instance, because we've had droughts and severe flooding in other areas. So lots of those seasonal factors impacting on food prices. In terms of transport costs, of course, we've seen significant petrol price increases in September and October. But those are all volatile components. In the instance of food, for instance, some of those production cycles are shorter. So extra production when prices are high should bring more products to the market and thus ease pricing again. In terms of the petrol price, we've seen significant petrol price cut at the start of November and again coming in December. So some of these price increases are volatile and will roll over again in coming months.
Yeah, Johann, staying with that of the issues that are affecting prices, what are the local and global factors adding to the ones that you've already spoken about?
So in taking it back a few months, when we had the start of this upcycle in terms of inflation last year, the supply chain constraints after the reopening of economies after COVID, That impacted heavily. Then we had the war in the Ukraine, beginning of last year, that impacted on oil prices, other energy prices, on food prices, etc. But because inflation is a year-on-year price calculation, as you move a year down the line and you don't see further increases to the same extent, then the year-on-year, the inflation rate starts falling off. And we've seen that our local food prices earlier this year have started coming off. Petrol prices have been easing, and then more recently we've had an uptick. But globally, big factors, especially on the oil price, that impacts on us. The rand exchange rate is impacted by what happens in the rest of the world mostly. So when the dollar strengthens, the rand weakens, and the weak rand on top of a higher oil price, that leads to significant petrol price increases in South Africa. Recently, though, the oil price have eased off a little bit, the rand has strengthened a little bit, and thus those petrol price decreases that we saw in November and expecting again in December.
All right, Johann, we know that the Reserve Bank targets inflation between 3 to 6%. This reading now touching the upper band of that. This is going to influence the Monetary Policy Committee, I'm assuming. What's the likely action come Thursday?
So yes, they will be concerned about this. And the main reason they would be concerned about this, because a number like 5.9%, you and me, build that into our price expectations, our inflation expectations. In other words, we expect our wage and salaries to be increasing to that kind of level. We expect when we walk into the shop that prices will be higher. So that's the risk for inflation down the line. If you and I accept higher prices and we're willing to pay those higher prices, that will be built into inflation down the line. Having said that, that means that the Reserve Bank will be concerned about that, and therefore they will warn about that in tomorrow's statement and in the press conference. But on the other hand, they will also look at the underlying price pressures. So inflation, excluding the impact of food and excluding the impact of energy prices, that has actually eased further. So the so-called core inflation number. It was 5.3% in April this year, then down to 4.8% by August, 4.5% in September, and slipped even further to 4.4% in the latest October number. So the underlying price pressures, excluding the more volatile components, actually easing. So I don't think the Reserve Bank will hike rates. They will keep rates unchanged at tomorrow's meeting. They will warn about these risks of higher inflation because they will be rightly concerned about that. But the underlying trend is lower, and they've hiked significantly in terms of interest rate increases over the last year and longer. So there's probably almost no chance of the Reserve Bank hiking rates again tomorrow.
All right, Johann, Chief Economist at Old Mutual, thank you so much for your time on SABC News this afternoon, just giving us insight into those inflation figures released earlier on by Stats SA.